So I don't normally make Wednesday videos anymore on this channel. However, I really wanted to share this one with you guys today for two reasons. First off, there is a potential trend setup on QQQ. If you're unfamiliar with what a trend means, it basically is kind of what we saw earlier on in the year before all of this chop, where we saw major breakouts like over here on QQQ. And then if you go to previous time periods like over here where you see multiple gap ups in a row and continuation, I believe we are on the cusp of that once the elections are over, or possibly right into the election. So that's the first reason I wanted to make this video. And the second reason I wanted to do an update on this Meta position since they just had earnings. If you remember from the Sunday video we posted, so the most recent one, I referenced a potential long position all the way back in the 570s from over around this range. And that's because we saw this call order come in, hit the tape. It was 2.9 million in premium for the at the money strike at the time. This ended up going over 50% today. So this whale got paid well before earnings. Very likely they exited that position before earnings, because why risk it? Or at the very least trimmed some of their position. As you can see right now, it is a little bit volatile in the after hours session because of that earnings that just happened. Plus they have the conference call right now. So we'll see what happens with it. But like I said, this one did perform very nicely. It hit all of the targets that I had trims, if you remember in that video as well. So each of the targets, the 583 trim, because remember, we always like to trim as we go higher to ensure that we take profits along the way. And then we also reduce our downside risk. And by the way, if you didn't watch the Sunday video, this is something I'm going to be talking about in the free webinar we're hosting next week. Again, you can join that by the link below. If you didn't see that video from before, I'm going to be going over all of my main trading strategies, all my risk mitigation practices, some indicators I haven't shared before on the YouTube channel. And again, that is free. All you got to do is put your name down below and then you can sign up for that. It is next week. Regardless, getting back to this here, it hit all the trim points that I wanted to see. I get satisfied, and now we have earnings. So going to be interested to see where it opens tomorrow, because if it opens back above like this 591, 590 level, I'm looking at around here, I'd consider that to be bullish and actually look for a continuation move higher from here. Now, if it falls back below, kind of between where we were previously, let's say around where 570 is, because remember we had an inverse head and shoulder from that video. I referenced the left shoulder here, the head, and then the right shoulder. We know characteristically this is a bullish setup, and it had the bullish outcome. We had that upside move. Well, if it were to fall back below over here, below this like 570, 571, I'd consider that to be bearish. Anything in between both of these lines I just drew, you're looking at more chop. So that's kind of similar to what I'm looking at for QQQ. And I'll show you why right here, because like I said earlier, there is the potential of a trend move. However, right now we are range bound. And it should be evident based on how garbage price has been trading lately. Like if you have tried to swing anything recently in tech, specifically if you're trading QQQ and you want to swing it, it's been pretty difficult, all things considered, because as you can see over here, this was over a week straight. I'll just circle it for you, over a week straight of consolidation. And then we had a trend day to the downside, but then it just reversed all the way back up. And then another week straight, or just about, where we've been stuck in another range. So very difficult to swing something like this. If anything, it just burns premium on the contracts if you are trying to swing it. However, when we do see this happen, it acts like a coiling spring. And this is something I'm going to talk about in that webinar, actually, because this is a concept that I've used for numerous years now, because whenever you have a coiling spring, like we have here, whenever it breaks in either direction, whether it be to the downside or to the upside, all of that built up energy that it's been accumulating throughout the time that it was consolidating, as we saw here, will get pushed out when it decides to break. For example, if we were to have a break to the upside here of this, which would require about 500, which is a very simple, an easy number to remember, but about 500, if we break above there, we can see an easy extension move to a new all-time high on QQQ, which would require, if I go back to that previous all-time high level, that would require about 503 mid. Very doable from here. However, again, we need to break above 500. As long as it remains under 500 and above roughly 495, we're going to remain range bound, similar to what I showed you on Meta. If we remain in this range that it's in right now after hours. Well, if we remain in this range over here, we're going to look at more range bound price action ahead of the elections until we can get above this 500 level. Above it, and we can see that an extension move. I'm looking to add a long position on a break of this for that target of 503, very likely goes to 505. So you're looking at about 5 points of upside. Nothing insane. However, this is something that can trend for a much longer period of time. So what I do in this scenario, kind of similar to what I showed you guys on Meta just now and in the previous video, I would add on a breakout of 500. Let's say it breaks out. We have our first 15-minute close above at like 500.36. Well, I can add there, and my risk can be a 15-minute close back under that level. So if it falls back under the 500 level in the 15-minute candle, then I'd get out of it. It could go anywhere. It could go all the way down to 499. I could take a buck loss on it. Regardless, if it falls back under, then I would stop out. Otherwise, we can see a trend breakout, which is very likely here, since it would break above this range, and we can see continuation a lot higher, and I can begin to trim. So I can trim 503 would be a trim point. I can continue to hold the other portion of that position. I'd trim about 1/3 typically, trim another 1/3 around like 504 high, 505. That's another resistance I have. And then I can hold the rest for even more continuation after if it chooses to do so. And what I like to do with those positions is I apply a trailing stop as price goes up. So similar to what happened with Meta over here, as it continued to go up and it hit each of my trim points, and I'll just get rid of these lines for you to make it a bit more clear. But as it goes to each of these trim points, I move up my stop from what it was originally, if you remember in the video, was back around 562, and then I move it all the way up to break even on the first trim. So that means if it falls back down to this roughly 571 level, it's not always going to be perfect with price when you're trading options, since the Greeks influence the pricing of those options. But regardless, if it fell back down to this level, then I'd stop out for break even, and I could at least have 1/3 profits that I took from up here. If it doesn't fall down and go to break even, it goes to the next trim spot. Okay, we made it to 589 mid over here, another 1/3 trim on that position. Now I can move up the stop again, something like 578. So the stop's in the green at that point. If we fell down from that trim spot over here, back down, and I stopped out on it, I would stop out the last 1/3 of my position in the green, plus the trim that I already had, which was in the profit, plus the other trim that I already had was in the profit. This entire sequence up here is just me moving up my stop as I trim. Price continues to climb to the desired target, in this case over here, which would be 591, which is the final target. It never went back to those previous stop levels. So this would be a perfect trade where it just continued all the way. And some trades aren't perfect. And that's fine, because in this case here, if it fell down right after that initial trim and I stopped out, I still made some type of a profit versus stopping out all the way back down here and missing out on all the profits I could have made through this initial run up. So this, I know there's a lot of lines on here, but I'm trying to explain what I do with my positions, because risk is everything as a trader. You will never make it in this game, and it's not necessarily a game, but I like to call it that. You never make it in this profession, if you will, unless you have a good risk mitigation strategy. The same would be applied here for QQQ on a potential trend setup. Now, again, this is a hypothetical if we were to go back above 500. Right now, we're trading 495. We still have a ways to go to get back up to 500. So let's say it doesn't want to go over 500. Well, the range here is still tradable. You're not going to have a trend move like I'd like to see, which would be that, again, breakout and just huge continuation to like 505, potentially 505 plus, like I referenced earlier. However, it is still possible to trade this range. For example, there's a very clear support over here around 495. Every time in the past week that 495 has been tested, whether it be this open over here we retested on the 50-minute, over here on the 50-minute, another one where we had a large wick under, that's 4 attempts, and all of them resulted in at least some form of an intraday bounce. This one over here, obviously a lot higher than the previous ones, but each of these are tradable as long as it remains around that 495-ish level. There is a potential long setup with, you can use these previous wicks, by the way, as a stop loss. So for example here, what I do is if it falls back down to 495 tomorrow morning, this is a buying spot around 495, and my risk is a 50-minute close under 494.46. You're looking at 50 cents of risk, obviously, with a 50-minute close. And again, I'll go into this more in depth in the webinar. With a 50-minute close, there's some more time risk, but it still reduces the chance that you get stopped out like we saw over here with this large wick. If you use a hard stop, it's very likely, if you're long in this position, you're going to get stopped out in this wick we saw over here. If you use a 50-minute stop, it's a lot less likely because you wick under, pick back up by the 50-minute candle, and it provides confirmation of demand from this range, and you could see what happened afterwards. So again, Not going to go into it super in depth in this video. Like to keep the YouTube videos short and sweet, but that will be in the webinar as well. But as I said, over here around 495, potential long setup, 50-minute close under 495.46 means I'm out of that relatively small amount of risk for a large potential reward of it going all the way back up to around 500, the upper end of that range. And you can trim as you see fit along the course of its lifespan. So in this case here, just another good risk reward setup. And as long as we stay in this range, there's going to be plenty of those scalp opportunities until, like I said earlier, we have that trend. So I prefer over 500. I think it is very possible we could still get above there despite the close today. But again, I'm waiting for confirmation. I'm not entering now because I'd like to see it get back above, or I maybe have a bias towards that for a variety of other reasons. I need to see it get above and show me that confirmation. Otherwise, it's no good to me, and I'm only going to be able to scalp in this range. As for bears, this will be the last thing I speak about in the video. First of all, this year has very clearly had a macro uptrend, so I don't really short as much as I have in previous years. I've been a long only book since the summer, and I've referenced that before in previous videos. But in this case here, I'm not necessarily interested in a short setup. There is a possible one, like I shared early in this video, around 491.60. If we broke below here, there's a really good risk reward setup around here. However, again, my bias is still that we eventually break out, whether it's right before the election or we have to wait for that election volatility to roll off. Probably the more likely scenario is the latter. But this is my ideal outcome up here. As long as we remain above that 491.60, I just don't see a reason to short it. I'm only going to be interested in either scalping dips to the long side or looking for that breakout confirmation and trend move. We could talk about it this weekend in the Sunday video if we are closer to 491.60 for whatever reason. But at the moment, going to keep it as is with this technical analysis video for you guys. Hopefully you found it insightful. Super interesting times ahead of us with the elections approaching and all these Mag 7 tickers reporting earnings today. And I see a setup here. It's just a matter of if we get that confirmation or not for it. So I'll see you guys this weekend.